All right, what's going on, everybody? Happy Sunday. Happy Turkey Week, almost. And so I figure we'll do another video on trading psychology. Um, and this one is going to be about uniqueness and probabilities. Now, I um, so chart patterns uh, display similar behavior and reoccurring patterns time and 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 time again. Um, this is due to multiple reasons, but one of them being, human beings have a sort of predictable manner about them in which they live. I don't know if that's the right way to describe that, but um, you get enough people together that are interacting with each other every day, and they don't really know that they're interacting with each other every day. They don't really think of it that way. They're going to display similar behaviors, similar and predictable behaviors that, depending on what sort of strategy that you are using, you can create an edge in which to trade. So now, what is important to remember is it only takes one trader to negate where you believe a support or resistance level is going to be, or a particular chart pattern, or how it'll play out, or the reason your double bottom chart pattern didn't work out, or your cup with handle didn't work out, or your stock that's going straight up for a month didn't continue to go straight up for the other month. It only takes a single trader to negate something. Now, there's a really good example of this in Mark Douglas's book, Trading in the Zone, which is the best for trading psychology. So I've listened to it on audiobooks and read it. And a really good example is there's a technician, technical analysis trader that gets hired for a firm, and it says to his boss, okay, here's the support level for this particular instrument. I think it was soybean futures, and so the boss goes, okay, so this is where the price will turn around. And the trader says, yeah. And boss goes, that's BS. Here, I'm going to sell, lots of these contracts. Boom, price goes straight through support. So, which proves the point where it only takes one person to negate it. So that brings up another point of anything can and does happen in markets. So you have a probabilistic outcome depending on any strategy that you have. I'm not here to discuss the best strategy, but you have a probabilistic outcome depending on a strategy you have. But nothing is guaranteed. So then if nothing is guaranteed, the only thing that I expect to happen is that something will happen. And why, if I'm wrong, it's whatever, right? I'm not like, oh, this is a cup with handle chart. This works 100% of the time. Here's my price target. It hits this 100% of the time. No. I always am placing a trade with first, where am I going to get out? And that is something that's non-negotiable for the most part, depending on the behavior and characteristics and similar things and whatever. But so that's kind of non-negotiable. Now, how can you then develop consistency in a unique and random outcome? Well, in the same way that a casino operates. And that is, they know their edge is, it's like a couple percentage points or something like that. I think it's like 2, or in blackjack, it's like, 4.5, somewhere along these lines. So they know over enough hands played that they will make money. And, it's a mathematical certainty. And it's not, they don't worry about one hand to the next hand to the next hand to the next hand to the next hand. They have, who hits the jackpot here or there, blah, blah, how this hand's going to be playing out. Because they know that, 54% of the time, they're making money. Right? So whatever the strategy you have, I don't worry about from one trade to the next trade to the next trade. Just like if I'm on a streak of winners, it means nothing about the next trade that I place. Or if I'm on a losing streak with a bunch of trades that haven't worked out, it means absolutely nothing for the next trade that I place. Now, that's not to say that my mindset is different, but if I got a bunch of winners in a row or a bunch of losers in a row, because the mindset is certainly different. Humans are emotional, but much like if I have a headache or whatever, I still go to the gym. Or if I don't want to get up early in the morning, I still get up in the morning, right? I mean, these things, they're like, it doesn't matter, it's like, oh, I'm tired and blah, blah, like that doesn't matter, right? So if like I'm feeling kind of down and, it's been a bad week, it doesn't matter. I have to continue to perform. Or if I'm feeling great, like it doesn't matter. I have to be, or I should say, if I'm on a winning streak, I have to be prepared for any outcome. So that's that. Now let's go over some things here coming into the week. And I don't really know exactly what to expect for this week. I'm optimistic for this week. This NASDAQ is still hanging in there. Yes, looks good. Yes, this is kind of up to resistance, obviously. So anything can happen. But we're not in any sort of stretched area here. So again, just with probabilities, the probability that we have started a new uptrend is higher than the probability that this will fail here. Now, again, tomorrow anything can happen, this week anything can happen, but we are in a bull market. Russell still looks really good. Dow looks fantastic. We have financial services looking good, rocking and rolling. Breaking out to, the ETF all-time highs, right? And this isn't even really that stretched. Sure, it's kind of getting there, whatever, but, this has got room. And I mean, if you look at Berkshire Hathaway, the largest holding in there, it's kind of right here at resistance. All right, let's look at some Bitcoin miners here real quick. So CleanSpark, these look good. Here, look at this. Okay, so this is some sort of cup with handle, right? And they're not all created equal, right? Sometimes they fail. Like here's a good example of one here that failed. Now I'm sure people that are much better than I am at technical analysis could probably explain as to why this is a bad one, right? This one to me doesn't really seem that good, if I'm being honest. I don't. In terms of this cup with handle, is some sort of consolidation, sure. And again, I mean, so I just kind of look at the risk to reward here, right? So, first of all, this is actually a pretty decent spot to go after these. Stochastic around 20. Yeah. Decent spot. Let's look at... So, I would go for right around 20 is where I would get out of this. And then if it continues to work, up around 25. Let's look at hut mining. I think this is my favorite looking one. Yeah, this is clearly the strongest one. So, but see, the problem is after, you kind of miss the strongest ones to where the risk to reward is completely off, right? Because, I mean, this could go down to $20, and that's, over 20%, right? I mean, that's huge. And it'd still be totally fine and be an amazing, buy point, right? So that's why the risk to reward is tough. I mean, you could play it where if it closes below 25, then you would get out. But I don't like to do that too much because it's easy to kind of get chopped in and out of things. But that wouldn't be terrible with this one. Riot. Yeah, see, I mean, shoot, this looks good. I would say this looks better than Clean Spark, but kind of similar, right? Yeah, I would say Riot looks better than Clean Spark with a similar kind of like risk to reward area. Although, so close below 1130, so what's that, 10%? And that is kind of a lot to take a stock down, for sure. Especially trading options. But the way to negate that massive volatility in terms of dollar amount and the P&L is to scale into positions. I pretty much always do that for the most part anyways, but that would be a strategy could do. And then let's look at Marathon. They're hot right now because they're buying all this Bitcoin. Okay, well, that's the Bitcoin miners. They're looking pretty good. Let's see, MicroStrategy. Yeah, see, like I was saying, this is a perfect example of when I made that video and said buying here is not a good idea because where are you going to get out? I said, I mean, it could come down all the way to 300 and it'd still be completely fine, right? I mean, this opened at 543 and closed at 396. I mean, that is over a 20% move. That's insane. In a single day. So, yeah. Yeah, so, that's a tougher one to go after. But, I mean, you guys, this is in a clear uptrend. Moving averages, moving up. I mean, yeah, this is fantastic. All right, let's look over Palantir. Wow, sweet. Data dog. Yeah, these are rocking, baby. Cool. All right, you know what I've kind of forgotten to look at? Some video games. Yeah, strength in video games is awesome. Again, I'm not going to go for this here. Right, I was talking about up here where I wasn't going to go for it. And clearly if I did, it would have worked out, right? but it could have just easily not worked out on this one. Kind of buying right into resistance. That's, kind of right around here, and it was already pretty stretched. It's not a strategy that I use. EA Sports. Wow. Yeah. I mean, I don't see anyone talking about these. Whoa. Whoa, 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 whoa. Look at this base. Wow. You guys, this is... Huh. I wonder why. Video games are cool and all, but I don't know. I don't know if it's like COVID where everyone's stuck at home. Maybe the holiday season? I don't know. Wow. So then let's look at this chart pattern. Whoa. Yeah, EA Sports is definitely the one you would want. Wow. Really cool. Yeah, no one's even talking about these video games. All right, that's it. I don't think I have any like individual stocks. So maybe we can try. Oh, jeez, am I gonna do this on video here? Oh, what is this? Any of the following? Study customs. Oh! Have I already done this? Is it already locked and loaded? Oh, it is! Oh. Yes! Cool. So I guess it just saves it. Okay. Not gonna go after these. Wow, is Shake Shack still down there? So, okay. So we know Shake Shack looks good. Riot. Man, yeah, see, there are some individual names to go after. Shake Shack, Riot, Clean Spark. I think I prefer Riot over Clean Spark, so Riot. Oh, pencil broke. Riot. Shake Shack. Alright, Shake Shack. We're not going after these. Let's look at Eli Lilly. Whoa. That is a no-go. Wow, their earnings was not received well. Well, that looks like a pretty big miss. Whoa. That is a no-go. Oh, Labu, XBI. Let's see. Yep, still cruising on up. I do believe that this could work. I could see pharmaceutical companies not doing so well with the new administration, but I think biotech would be fine. But again, that's yet to be proven, and I was wrong about that before, so we'll see. Scan. For solar, let's look at First Solar, and we can look at copper for solar. Nope, this is now a no-go. Wow. Copper is also a no-go. So, let's see. Are there other... Where's my uranium? How do I... Scan in actionable. Okay, so we can change this to nuclear. Where is this? N. Nope. Nuclear. Scan. Lack. Oh, no way. This one would be really cool if this worked out. Oh my gosh. Huh, what the heck has happened to this company? I did a bunch of write-ups on them back in the day. In the day of a few years ago. They had a really good team. I wonder what happened. But this looks really good right here. What the heck? Now, but this is a little troublesome that why are they lagging so poorly, you know? Is this a turnaround stock? This is something I would have to do more research on. And the problem is with the 200-day moving average, not already moving up and the stock not in an uptrend, the upside will be less than it would be. But wow, no way. Cool. All right, that's it. That's basically all my watch list that I use. So, yeah, it's going to be a fantastic week. Good turkey week. And we'll see you guys tomorrow.